Peace, everybody. It's the grand scheme of crypto. First and foremost, I am not a financial advisor, and this is not financial advice. God bless everybody out there in the crypto space. Thank you for tuning in. Today, I wanted to take a look at Warp Finance and give you guys an update and put it on your radar in case it isn't. I have never done a video on Warp, but if you follow me on Twitter, then I'm quite sure you've seen my retweets about it. I don't constantly tweet about it, but I do tweet about it or retweet others' tweets about it quite frequently. Now, why do I like Warp? Well, really, let me first off start this video off by going to the person who put me on to Warp, which is Mr. Mstiive. So if you don't follow Mr. Mstiive on crypto Twitter, please get on Twitter, type in Mr. Mstiive, go and follow this man if you want some crypto gems, some crypto alpha, pretty much. That's all I'm gonna say. This is who put me on to this, so I'm giving you guys my sources as well as giving you guys information throughout the video, and like I said, bringing you guys the best of crypto Twitter and bridging that gap between crypto Twitter and YouTube. So anyway, without further ado, Warp Finance. Now this is a super thread by Mr. Mstiive. I'm just going to go ahead and go through it for you guys so you guys can see the importance of Warp Finance and why he is bullish on it, and also why I like Warp as well and think it will do extremely well in the near future here. So a $4 million micro cap with a $13 billion total. Is this value locked? TAM. So I have to look up what TAM means. Warp is about to release its V2, but I think that's value locked. It's about to release its V2 blacksmith, further innovating on lending for yield-bearing assets. The DeFi 2.0 narrative is strong, but the potential of the Element Fi ecosystem it will leverage is underappreciated. And then he further goes into that in this thread. Also, just to quickly go over to DeFi 2.0. So DeFi 2.0 is an upgraded version of DeFi, attempting to fix the existing weaknesses and leverage the strengths of the current DeFi, which can open even more promising possibilities for users. And one way that one example of this is Warp, providing an optimized lending platform powering a liquidity engine. So let's get back to the thread. Now, Warp was a pioneer in DeFi summer by being the first to enable borrowing against liquidity positions, LP. This innovation unlocked a 4.7 billion TAM beast, whilst the borrower continued to earn LP fees on their underlying assets. Other DeFi dApps have since copied this idea. V1 is live today with the 16.5 million total value locked. If you're bullish on WBT/ETH in Q4 and wanted to keep exposure but also wanted to trade alts, you could add 50% of each as Uni V2 LP and earn around 2.5% APR. Number 2, borrow 75% loan to value USDC at 2.19% APR. Buy alts and profit. So you can essentially leverage your WBTC and ETH and exposure to those tokens and also still trade altcoins pretty much. So it kind of gives you it pretty much gives you a way to spread your money out. You know, most people are locked into a lot of coins and they don't really know how to leverage their money to give them more money to kind of play with and play in these different coins. And that's where like the yield farming and things like that come into nature, and that's another big part of DeFi and DeFi 2.0. But now Warp are innovating again with the goal of freeing the potential of other illiquid yield generating assets, introducing Warp V2 Blacksmith with the initial focus on integrating Element Fi fixed yield assets. 163 million total value locked. Warp will service and expand this total value locked. How, you say? First, what does Element Fi do? Well, it leverages yield-generating pools like Curve Finance and iEarn Finance and splits it into principal tokens and yield tokens. Principal tokens are the locked upfront capital, e.g. 100 ETH. Yield tokens equal future yield expectation, for example, 12 ETH, accruing value over time. And here is an illustration of that. And let me actually go and look at some of these illustrations here so you can see. give you a more of a visual element. The innovation here is that the primary market maker can now sell this PT and just keep the YT. So we can sell the principal token and just keep the yield token or future. Yeah. Example, if the primary sells the PT for 90 ETH to a secondary buyer, primary has spent 10 ETH for a yield token worth 12 ETH, 20% APR. Secondary has spent 90 ETH for a 100 ETH PT, 11% APR. And here's an illustration of that. So each user profited in this illustration here, 12 ETH and 10 ETH. So it's very interesting once you get into DeFi 2.0 and these different tokens and what they're building. That is element allows the primary to sell a PT at a fixed discount, which becomes the secondary's fixed interest rate. This is a great innovation, but from the primary example, you can see that the secondary has a much higher capital requirements, 900%, and earns lower APR, -9%. So let's take an illustration of that. Lock capital 10 ETH, asset value 12 ETH, profit 2 ETH. Secondary user, lock capital 90 ETH, asset value 100 ETH, profit 10 ETH, 11% fixed. This means we see the market force the discount to be as high as possible, often resulting in the fixed APR exceeding the YT APY. This is not good for the primary, who would be at a loss to sell, thereby limiting total value locked. This, in my opinion, is the main reason Element Fi only has $160 million in total value locked. We can see this from this screenshot here. Why do I say only 163 million total value locked? Well, the potential of the ecosystem is much bigger. Let's look at the total value locked of the 3 CRV assets supported on launch. Try Crypto 2, $725 million, LUSD at $112 million, STETH at $4.8 billion. That is $5.7 billion could find its way through Element Fi in these alone. Remember, guys, always do your own research on this. I'm merely presenting this information as best as I can. I am by no means an expert, just learning as much as I can, participating in a new space, and enjoying the fruits of all of this labor and learning. Enter Warp Finance V2 Blacksmith, which will provide a platform for borrowing stables using Element Fi assets as collateral. That is, instead of forcing the primary selling the PT at an unfavorable discount, they could instead borrow against it. This drives a competing market force to selling the PT and forces the market to reach a Nash equilibrium to benefit both the primary and the secondary equally, which was illustrated earlier. Example, when annualized discount less than borrowing interest rate, primary will sell at a fixed rate, else they will borrow against it. We saw that the fixed APR is greater than the YT APY for many assets, yield token. In this case, the primary APR is 0%. Adding the option for the primary to instead borrow against this asset forces the secondary to reduce their fixed rate to remain competitive. I even did the maths. So look at that. Mr. Mstiive put this all together and even did the math for us and everything. So, man, definitely go. Big shouts to Mr. Mstiive again. I'm going to be doing this all throughout the video. Go and follow him. I'm not taking credit for any of this information. This was all put together by him. I'm merely presenting it and trying to bridge the gap between crypto, Twitter, and YouTube. So there's an illustration of that and the math for you guys. That is, also thread will be linked up in the description box below. That is, equilibrium should normalize about the threshold where 50% will sell at a fixed discount and 50% will borrow against the asset. This is great for Element Fi, as a more balanced system will undoubtedly lead to more curve YFI assets locked. $13 billion potentially for greater total value locked. Further, both the primary and secondary participants can use Warp to borrow against their PT to buy even more PT at a discount. This creates leverage in the ecosystem, creating further demand in the system for PT, thereby increasing the incentives for primaries to mint more. How does leverage APY work? Let's assume a fixed YT APY of 24%. If the Warp lending rate is half that at 12%, the borrower now gets a 10x return on the original APY, 240% APY. As the warp lending rate decreases, 12% is a high APY for stables. Leverage tends towards 20x. And here's an illustration. So if both primary and secondary are using warp, we could see up to 100% of the element 5 total value lock come through warp, whilst simultaneously making element 5 PT YT more attractive to significantly increase the size of the pie. That's why assuming just $163 million total value locked in warp is FUD. Why is this important? Well, you can lock your warp into VWarp and earn a share in the platform fees. The fees generated will be able to be used to market buy warp. Further, VWarp can be used as collateral for borrowing against LP and PT positions. Another innovation is that each lending pair on warp finance is isolated to that pair, and each carries its own risk and reward. Warp will also release Chisel, which will enable users to add lending to multiple pools in one click to create a weighted fund of varying APR and risk. And there's so much more. The Warp team has big plans, some more milestones planned for the next 4 months. Custom pairs, borrow against any fungible token. Uniswap V3 LP, borrow against NFT. Free bridge to L2 capital. The aim of Warp is to pioneer unlocking capital efficiency. Also worth mentioning that the circulating supply on CoinGecko CMC is wrong. Admins in Telegram say around 15K. From my estimation, circulating supply should be closer to 17K, which will put the market cap at 3.7 million, not 6 million. Fully diluted valuation is $30 million, well below the expected minimum total value locked from Element 5 integration. So in short, V2 will instantly join the Element 5 ecosystem with $160 million in total value locked. Then the market balancing and leverage capabilities of Warp could quickly bolster that total value lock to absorb more of the $13 billion plus TAM. Collected fees will be distributed to VWarp stakers. Warp is less than $4 million market cap right now. I'll leave with some links. So there's also a thread by Crypto Fundamentals, who I also follow, who is also the GOAT. So go and check out his thread as well, and he has a thread on Warp. So allows unused liquidity provider tokens to be used as collateral for borrowing stablecoins. Pairs are isolated from each other, making their risk independent of other pools. The token delivers governance functionalities and free fee sharing. So I'll leave both of these linked up. Well, actually, I'll just leave a link to I'll leave both of these linked up in the description below. Also, one good thing. So big shouts to Mstiive and Crypto Fundamentals on Twitter for these threads. Go and check out Warp's official website, Discord, Telegram. They have a link tree right here. The current price of Warp is $184. Market cap is actually not that thread was from October. The current market cap is around $7 million, and this could be incorrect because, as he said before, CoinGecko and CoinMarketCap still might not be correct. But do your own research on this, and you can always jump into Telegram and ask really quickly. You can get it on Uniswap. And before we check out, Mstiive. Also, what I forgot to mention about Warp is that they are doing buybacks, and they also just had a huge partnership with Angular Finance. And so we'll go, you can see that on their Twitter. And so this is huge. Brace yourself for the launch of Warp V2 soon and Angular in Q1 of 2022 for a disruption of the DeFi landscape. So there you have it, guys. Warp. Always do your own research. DeFi 2.0. Don't forget to follow Mstiive. Don't forget to follow Crypto Fundamentals. Don't forget to check out my Patreon, where I'm always lurking and linking juicy information like threads, like different coins that I'm looking at. different plays that I might be making, coins I'm buying, all sorts of information, pretty much everything. And also, just by becoming a member of the Patreon, you also automatically become a member of the Discord and Telegram chat groups. So yeah, guys, there you have it. It's the grand scheme of crypto. I'm out. Peace.